Hello everyone and welcome to Day Trader S&P 500. Today is Thursday, March 30th, 2023. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500. We want to get you guys caught up, our subscribers to our YouTube channel, with what our subscribers to our newsletter have had the last several days. Let's go back to the 28th. You guys can see what's been going on, and then we'll go forward from there. We've got our upside triggers here and our downside triggers here. Okay, our downside trigger at 39.9950 was hit. We had a direct hit on our target there, actually within 0 points. Okay, then the market showed us respect for that target by rebounding up some 20 points or so, and then our next downside target was hit within a quarter of a point in the same day. So we had a wave 3 and a wave 5. There's a couple different ways to label that, but again, we had a direct hit to this downside target after that trigger was activated in red, and then we had a move up and then a direct hit on our next target right there. Okay, and there's the trigger targets. It was the 1.00 and the 1.272. Okay, and so then let's see what we got here. Yeah, the first one was hit at 10:34 a.m. Eastern. The next one, excuse me, was hit at 1:58 p.m. Eastern. Both of them showed respect by moving up from those hits, okay? And our upside targets remained. So without further ado, that was on the 28th. Let's get you guys caught up with the 29th. That's the 30th. There's the 29th. Little pre-market open. Now this time we have our upside trigger activated. There it is right there at 40.3425. That was the high so far. At the time, 40.4050, and then the first target was a 786 retrace right there at 4044.50, okay? And that's the language of it spelled out over there. We may as well jump into today, and then we'll get to the chart analysis, okay? So then we go to this morning's report right here. Again, those upside targets were activated. Here they are, okay? So that first one was a couple days ago, made the next high. This one was, I believe it was yesterday. And there's the next one at 40.78 and gives us our next targets up here. That is the 786 retrace from the February 2nd high. And that is the target 41.71. where wave C equals wave A, okay? So we're looking for some direct hits to the upside, excuse me, okay? And there's the verbiage on that there. Okay, so let's get into the chart analysis if we can. I want to start with the US10yr. This is a daily chart. It's from that 5 waves up from the March 2020 lows into the October 2022 highs. We have 5 waves down here for wave A at 3.21%, wave B up at 4.089%, and that was on March the 2nd. Again, this is a daily chart, and here's wave C. So far, it's hit a low of 3.287% on March 24, and it looks like it's rebounding off that. The ideal Fibonacci targets where wave C equals wave A is 3.075, and the Fibonacci 382 retracement of the entire 5-wave rise up from March 2020 to this wave high here at 4.335% is 2.810. So we have to allow for a move down to these Fibonacci targets. When this B wave high is taken out, those targets are eliminated. So if it goes above here first, that would be another trigger. Above here first would give us a higher target, which we can calculate once we know that's over. And below this low here of 3.287 brings these lower targets into play. Okay, moving on, let's look at the S&P 500. Here's a daily chart, basically from the August 16th high. Okay, we have the alternate count in blue, as you can see there. It calls for a higher wave 2 high at 43.73. Okay, a move above 41.95 and a subsequent move above the make or break at 43.25 will activate the alternate count. By inverse here, a move below this B wave low of 37.64 eliminates the alternate count, okay? And then a move below this would bring a move down to and below the 34.91 wave 1 low on October 13th. And you can see from the B wave high, this is wave 1 down on October 13th. So far, this is wave 2 up on February 2nd. And by the way, the Q's past this high. It could be an expanded flat. I'll get into the Q's and I'll update the NQ analysis. We have a subscription for that for our subscribers. We do that once a week on weekends, NQ futures. But anyway, the Q's past this high. It's either leading or there's divergence. We'll see which persists. The divergence, because this is definitely a lower high here. Okay, but that's where the Q's surpass it. But again, 1 down here, 2 up to the February 2nd high, 3 equals 1 at 33.61. As long as that wave 2 high holds, so far so good. Okay, that's the analysis there, and there's the dates in purple, the wave count and prices in black, and the alternate count in blue. Okay, that's the bigger picture. Let's drill down. I think we can go from that 2 high. Yeah, there we go. Now we're looking at an hourly chart. There's wave 1 in parentheses down, wave 2 up, wave 3 equal to 2.618 extension. Wave 4 was a 618 retracement. Wave 5 down to the March 13 low. That is 1 of 3, and we're working on 2 up of 3. That's where those triggers were activated. And this is the cash market here. You can see wave A up, wave B down, and here are there's where C equals A. Maybe I'll type that in here real quick. Get that in. C equals A at 4140.24. We'll just call it 4140. There we go. Okay, that's where C equals A, and you can see the market has just moved this morning. It's about 10:30, a little past 10:30 a.m. Eastern today on the 30th. There's our targets there. You can see 4112 is a 786, and it just passed the 618 retracement. Let me get that back down into, that's more like it. There we go. Okay, so from here, our next targets in the cash, excuse me again, 4112 and 4140. We'll see where that goes, okay? Obviously, probably won't get there in one day, but it's on its way. Okay, that's it on the S&P cash. Let's move to the ES, E-mini futures. Again, we're looking at a daily chart from the wave B high, excuse me, on 8/16. We've got a 1 down to the October 13th low and 2 up again on the February 2nd high at 42.08. There's a make or break there, but the bigger resistance line here is this B wave high at 43.2750. Okay, you can see that's 1 down again. There's 2 up to the February 2nd high. Here's 1 down again, A up, B down, and there's those targets there that we showed on the report, the 4150.75 and the 4170. That's where this should go to end wave 2. Okay, that's 1 down, 2 up. The alternate count is eliminated with a move below 37.88, the B wave low, and it's activated or becomes the primary count with a move above the 43.2750 high back in August. Here's where 3 equals 1. From that 1, 2, that may be different because that 2 has gone higher. I don't know if I can get that live, or maybe I did. Let me see here. I don't know if that's updated since this morning. This may not be to the point. I like to be to the point. That says 37.28. I'm sorry, I'm looking at the wrong degree of trend. We may have that at the smaller degree. That's where 3 equals 1 from that 2 high. My mistake. And there's a larger intermediate wave C equals A at 31.59. We've got to get a 1 down, a 2 up, and I'll show that to you guys, what we need to see here. There's a 1 down, a 2 up. We need a 3, 4, and a 5. Let me do something in the settings here so you guys can see that. There we go. Okay, so that's not to scale, but that 5 would be down there. Okay, that 4 would have to stay below that wave 1 high there. Okay, 2 up is still in play. Once it's done, we can calculate the targets for 3 down, and then once that's done, we can calculate 4 up, and once that's done, we can calculate 5 down, and there's where 3 gains equality. That should be the minimum extension. Okay, in the meantime, we're looking at 2 up. I think we can look at that in more detail if we go from the daily to the hourly. I had to break this down into sections because there's so much information here. From the February 2nd high, we have a 1 down, 2 up in parentheses, a 3 down, a 4 up in parentheses, and a 5 down to complete the larger degree wave 1. There is a lot going on this chart. I kind of try to keep things in different colors so you guys can tell what's going on. All these direct hits, targets and actual, 1, 2, 3, 4, 5, 6, 7, just into the March 13th low. And we have more since then. Okay, but again, in purple, these retracements are just unprecedented. A 786 that yielded a lower low, a 786 that yielded a lower low, then a 986, those two 786, a normal 618. Then we have 3 in the 900s. There's a from this high to this low, there's a 904 retracement with a lower low, a 979 retracement with a lower low, and then a 993 retracement with a lower low. Okay, then we got wave 4 up and wave 5 down. So from the February 2nd high, that is wave 1 with a circle around it. Now let's move forward. From there, we'll get this extrapolated out so it's a little bit easier to see. Okay, let's bring that over there and that over there. There we go. Okay, so we had a direct hit on the upside over here, another one on the downside over here, and there's our triggers. Okay, that's what we're working on right now. This was in that report where the upside triggers were hit. Well, first the downside triggers were hit, and then the upside, we got 2, 3 in a row. Okay, so this one right here, 40.78, that's where C equaled A right there. Went above it, so that brings these targets into play, and our lower triggers are way down here. Okay, so there's A up, there's B down, there's where C equals A. It may have just stopped there. This is live, this is 40.80, and it's at 10:37 a.m. Eastern time. Okay, we'll see what happens today, but there's the upside targets. Once that C equals A, 40.78 was surpassed to the upside, and I believe that was, let me get that high, that would have been today at 10 a.m. Eastern, 40.87.75. So we'll see where that goes. It's early in the ball game here, and this, I don't think these targets, we can expect them to be achieved in a day, but that is the next upside target. So that's where we are. That's 1 down, and this is going to make a 2 up somewhere in here, and it should stay below that February 2nd high over here of 42.08. Again, repeating, that 42.08 high is not nearly as important as that 43.27 high, okay, to the bears. Okay, that's what we're looking at. I think we'll just leave you guys with that last pick on the pre-market open. That's a little clearer picture for you guys. There's where we are, okay? So we'll see how it plays out. And until next time, take care, everyone.